Romit, let's start with you. When I look at where Altera was on Friday, why do we see the huge boom now?
Well, this deal has been, rumored for several months now, and it wasn't entirely clear whether Intel would pay the rumored price of $54 a share. But you're getting it this morning.
Romit, is $54 too? I mean, $54 is clearly what it took to get this deal with Altera done. Is it too rich? I think so.
Look, if you back out the cash that Altera has on the balance sheet, the $17 billion purchase price is more like $14 billion. And Intel would argue this is a defensive move for them. It's going to help protect their turf and servers, which accounts for about 50% of the profits. But having said that, when we run the numbers, the deal looks like it's only about 2 to 3% accretive to Intel's earnings, which isn't very much.
No.
In addition, they're buying a business that's been under some pressure the last few years.
So, Ed Hammond, why then did Intel feel it had to buy Altera? Is it the company was interested, we know that,
Yep.
but they couldn't come to terms on a price, and it seemed as though Intel was going to be disciplined.
Yep.
And then the Avago Broadcom transaction took place last week, and then
all discipline flew out the window.
Well, I think in this market that is the sort of general principle at the moment. Look, I think Intel's initial offer for this, which was obviously back in April when we and others reported on these discussions, we think it was about the same price. So we think this 50, they haven't gone up from the 54 a share. So in a way, they have been quite disciplined, or at least they've been able to force the seller to sell at the price they had originally wanted them at. Does it look like a full price? Yes, I think it's sort of 55, 56% premium to where Altera was trading before those talks were first reported. So it is a big price. I think the thing for Intel, and Romit mentioned this, is they already are big in this supplying chips for server space. This obviously defends that even more, gives them an even bigger slice of the market. And a lot of the deals we're seeing done at the moment in tech and in other sectors are about putting that moat around what you already have and making it bigger and stronger.
Well, you say deals. Yes, we got Avago Broadcom, and Avago's been a consolidator already. Is the expectation that we're going to see more semi-deals done?
I think so. I mean, as long as I've been covering mergers, there's always been this huge amount of speculation. We're going to see a huge wave of semi-deals. We're going to see this, this, and this. Just to put this in context, we had seen, since the beginning of 2013 to almost the end of the first quarter this year, we had seen $1 billion of reported deals in the semi-space. And then obviously we've had this $37 billion deal, and now we have this deal at sort of 17. So we've gone from almost nothing to this huge hit already. Does it continue? I think so. There's pressure on the others in the space to consolidate.
Romit, who's next?
Well, it's tough for us to speculate on specific combinations, but we believe that Qualcomm needs to do a deal in this space. Their core market, smartphones, is maturing, and they certainly need to diversify.
So what would make most sense for Qualcomm then, if broadly speaking, and perhaps even specifically?
We really can't comment on potential takeout candidates.
Okay, well let's not talk about individual companies. What is it that Qualcomm needs? Where is the cupboard bare?
Well, they just announced a product or intention to get into the server market, and the road to doing that organically would be very long. And so, naturally, if you look at other companies that have a presence in the data center and the server market, Xilinx, which is a close competitor to Altera, would certainly be a name on that list. Cavium would be another.
And
Ed, what do you think?
In terms of more consolidation?
Yeah.
I think it's inevitable. I think we're seeing this in every single industry at the moment. We're seeing, there will be one big deal and it will trigger other big deals, and it's just running and running and running. Everyone has this access to cheap cash. Everyone has a shareholder base that wants some C deals. And you know what? If you're a potential target, you realize you're probably not going to get better value at any time in the cycle than now. So if you're going to sell now.
All right, Ed, thank you very much. Ed Hammond covers M&A here at Bloomberg. Romit Shah of Nomura. Romit, we thank you very much.